So, good morning, everyone. Good morning to our Dean of the College of Accounting Education, Lord Eddie Aguilar. And I am Jair Roy, and I am an intern student of the College of Accounting Education, a BSA student. And today I am here to discuss about merchandising business, specifically journalizing merchandising business transactions. At the end of this lesson, the student will be able to understand the different types of merchandising business transactions, including purchases, sales, and returns, identify and differentiate between cash transactions and account transactions, learn about the concept of transportation costs and its impact on merchandising business, and journalize transactions in proper form. To start with, let me first define what is a merchandising company. So merchandising company is an enterprise that buys and sells goods to earn profit. So difference lang nila between services, when we say service business, it is rendering a service and earned income. But when we say merchandising company, it is simply buying goods, and they do not put the goods for further processing, but they simply buy the goods and sell it to customers to earn profits. We have wholesalers in which they sells to retailers and retailers sells to customers. So merchandisers, primary source of revenue is sales. So sales ang primary revenue ng isang merchandising company. So to start journalizing, let's first learn about recording purchases on merchandise business. When merchandise is purchased for resale to customer, the temporary account purchases is debited for the cost of goods. So if periodic inventory system ang gamit nato and we debit purchases and we credit whatever we give in return of those purchases. And if we use a perpetual inventory system, when we say perpetual inventory system, it means that the company is updating the inventories records every time there is a movement, every time there is a sale and there is a purchase of inventory. The inventory account is it has a running balance, or it is updated from time to time. So at any given point of time, you can determine the balance of the inventory, and the physical count at the year end is not necessary, whereas in periodic inventory, they count the inventory either in annual basis or monthly basis. So usually a perpetual inventory system is used when the company possesses a large inventories. And yeah, so next is purchases may be made for cash on account. So cash or on account. So we know that when we purchase, we can pay it immediately with cash, or we can have a credit purchase, or pwede natin siya utangin. So the purchase is normally recorded by the purchaser when the goods are received from the seller. Each credit purchase should be supported by a purchase invoice. So this is how we record purchase on account. Under the perpetual inventory system, for the purpose of this discussion, we will be using perpetual inventory system. For purchase of merchandise under the system, we debit merchandise inventory and we credit accounts payable. So when we use periodic inventory system, we debit purchases. But for the purpose of this discussion, we use perpetual inventory system, in which we debit instead purchases, we debit the account merchandise inventory, and we credit accounts payable to recognize our purchase on account. Okay, so if it is a purchases on cash, we just credit the cash, simply the same. Under perpetual inventory system, we debit merchandise and we recognize the 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 payment that we did through cash. So we credit cash, and this is how cash, and we record purchases and cash with this entry. For example, purchase an account. On January 1, 2016, John Traders purchased merchandise for 15,000 on account from Sam and Co. The journal entry for this purchase would be, so we debit merchandise inventory for perpetual inventory system accounting, and we credit accounts payable to recognize the liability. This is how we record a purchase on account. If it is a purchase on cash, on January 1, 2016, John Traders purchased merchandise from Sam & Co. paying 15,000. So the journal entry would be an increase in inventory, debit merchandise inventory, and we credit cash. Record purchase on cash. So let's proceed with the purchase returns and allowances. So hindi maiwasan sa isang business during the purchases na may mga inventories na purchase nila which is defective and unsatisfactory. So a sales returns and allowances on the seller's book is recorded as a purchase return and allowance in the books of the purchaser. So kung ikaw yung seller and may binalik sa na goods, you debit sales returns. Pero kung ikaw yung buyer, may binalik ka ng goods, you debit purchase returns. So purchase returns is a contra account to purchases. So whenever we debit purchase returns and allowances, we are decreasing the purchases or the merchandise inventory. And it has a normal credit balance. So the purchaser initiates the request for a reduction of the balance due through the issuance of a debit memorandum. Bakit debit memorandum? Kasi 'di ba nung purchase on account tayo, we credit accounts payable. But because of the reduction, we debit that account to decrease our liability. The debit memorandum is a document issued by a buyer to inform a seller that the seller's account has been debited because of unsatisfactory merchandise. So, binabalik talaga ng business ang isang inventory sa isang supplier if it does not satisfy their expectations. So to have an entry for this, because merchandise inventory was debited when the goods are received, we simply credit the merchandise inventory whenever we return it. So we debit accounts payable to decrease our liability, and we credit merchandise inventory to decrease our inventory as well. This is to record purchase returns on account. And on the other hand, when it is a purchase returns of a purchase made in cash, we debit simply the cash kasi we receive it back from the supplier and we credit that inventory. Simple as that. So the return of purchase on account. Upon delivery, John Traders found a serious defects on the items purchased on credit. So this is an example, a scenario where a purchaser return the goods to the supplier. So si John na pag-receive niya sa inventory, nakita niya na may defects ng mga inventory na pinurchase niya. So he returned it to Sam & Co. So what would be our entry? Our entry would be we recognize the decrease of our liability, we debit the accounts payable, and we recognize the decrease of our inventory, we credit merchandise inventory. If we return the purchases which are made on cash, we debit cash since we received the cash back from our supplier, and we simply credit merchandise inventory. It's the same scenario. But this time it's a purchase on cash being returned to the supplier. So now we proceed to recording sales of merchandise. So I hope you are okay with the purchases. So let's move on to the revenue or sales recognition. So revenues are reported when earned in accordance with revenue recognition principles. So hindi ka pwede mag-recognize ng sales if such inventory is not received by the buyer. And in a merchandising company, revenues are earned when goods are transferred from seller to buyer. All sales should be supported by documents such as cash register date and sales invoice. I know that you are already familiar with those documents. So when we record sales, this time kita na naman yung seller. Kanina we are the purchaser and now we are on the side of the seller. We are the seller. So if we record the sales on cash, the cash account, we debit the cash account, and the sales account is credited to recognize our sales under the perpetual inventory system. So here's what I'm talking about. Every time may movement tayo sa inventory, under perpetual inventory system, we record the changes in our inventory balances. So instead of having just one entry, we recognize also the decrease of our inventory. So we debit cost of goods sold and we credit merchandise inventory to update the balance of our inventory. If it is a credit sales, we debit accounts receivable and we credit sales, and we update also the inventory. Same with the other entry we presented earlier, it is debit cost of goods sold to recognize the goods being sold, and we credit the merchandise inventory to recognize the decrease of our inventory. So, for example, on January 1, 2016, Sam & Co. sells merchandise for 10,000 cash to John Traders, costing 8,000. Sam & Co. would record this cash sale in its general journal by making the following entry. So this time, hindi na tayo si John Traders, we are Sam & Co. For that sales and cash, we debit cash, kasi naka-receive tayo ng payment from John Traders and recorded sales. And we simply update our inventory records by debiting cost of goods sold and crediting merchandise inventory based on the cost of our inventory sold. So, sa first entry natin, it is based on the selling price, and the second, to update the inventory, it is based on the cost of the inventory. Next is credit sales. So in this credit sales, simply we debit accounts receivable and we credit sales. This is the selling price. And we debit cost of goods sold and we credit merchandise inventory at the cost of the inventory being sold. Now let's proceed to the returns and allowances. So hindi maiiwasan as a seller, there are times na hindi natin namalayan that we delivered a defective inventory to our buyers. So sales returns results when customers are dissatisfied with merchandise and are allowed to return the goods to the seller for credit or a refund. So yung returns, it is returning our goods to the supplier and request a refund. Sales allowances result when customers are dissatisfied and seller allows deduction from the selling price. So on the other hand, yung allowances is, for example, naka-receive ka nagbayad ka at an expensive price, and then you receive a product na hindi deserve yung price na binayad mo. So now, the seller would adjust the price to make it compatible to the quality of the product that you deserve. So may allowance sila na ginawa for your transaction. So sales returns and allowances. To grant the return or allowance, the seller prepares a credit memorandum to inform the customer that a credit has been made to their accounts receivable. So yung credit memorandum, yung sign na yung request mo for returns is already approved. So sales returns and allowances is a contra account to the revenue account or the sales account. So when you debit sales returns, it is automatically a deduction from your sales. It is part of the computation of your net sales. Same with the purchases, net purchases. We deduct our purchase returns and allowances. So the normal balance of sales returns and allowances is debit balance. So when we record sales returns and allowances, ganito yon. Yung entry natin as a seller, we debit sales returns and allowances and we credit accounts receivable. Why? Because to decrease our sales and to decrease our sales and to decrease our AR, accounts receivable. And then we debit merchandise inventory again kasi na-receive natin again yung inventory, and we credit cost of goods sold to update the inventory balance. For example, John Traders, upon delivery, John Traders found serious defects in the items purchased on credit. John Traders returned the merchandise to Sam & Co. So, nung the time na na-purchase si John Traders sa atin ng product na inutang niya, recognize na may defects sa items na pinadala natin. So simply, as a seller, we debit sales returns and allowances, we credit accounts receivable to recognize the decrease of our sales and our accounts receivable, and to update our inventory by debiting merchandise inventory and crediting cost of goods sold. Simple as that. So now let us proceed to freight costs or transportation costs. So whenever we deliver a goods to our buyer, or we simply recognize a transportation cost kasi wala nang free ngayon. Every courier, every transaction may bayad na. So the sales agreement should indicate whether the seller or a buyer is to pay the cost of the transportation of the goods to the buyer's place of business. So after di ba sa Shopee meron tinatawag cash on delivery, or so sa Shopee tayo talaga yung nagbabayad ng shipment. So yung mga transactions or purchases or sales, may agreement talaga who will pay the freight. And usually based on reality talaga, usually tayo yung nagbabayad ng shipment. So we have two kinds of transportation cost recognition. We have FOB shipping point. This is two types of agreement, and we have FOB destination. So when we say FOB shipping point, goods placed free on board with the carrier by the seller. So kung tayo yung seller, hindi tayo magbabayad. Yung buyer ang magbabayad. When we say shipping point, buyer. Buyer ang magbabayad. So upon shipment mo as a seller, hindi mo babayaran. But when the goods are received by the buyer, sila yung magbabayad ng freight cost. Sila nang magbabayad ng transportation na ginawa ng courier. So if tandaan nyo, if shipping point, the buyer shoulders the freight cost. So in FOB destination, it is an opposite one. When we say destination, the seller pays the freight. So kung tayo yung seller, upon our shipment, bayaran na natin yung shipping cost. Hindi na yung buyer yung mag-shoulder, tayo na. So upon shipment, babayaran na natin yung freight cost, or transportation cost. So what is the difference? So ang freight in is debited if buyers pays the freight. If FOB shipping point, and then nagbayad isang buyer, ang buyer mag-debit siya ng freight in. The freight in account is an adjunct account and it is added to our purchases. So kung mag-compute kayo ng net purchases, add freight in, deduct any returns, allowances, and discounts. So that's how we get our net purchases. So freight in is part of our purchases. On the other hand, freight out is a delivery expense, meaning it's part of our operating expense. If we are the seller, we debit freight out to recognize the expense of the shipment. So yun. So for example, accounting for freight costs. Sa buyer ng book, when the purchaser directly incurs the freight cost, the account merchandise inventory is debited and cash is credited. Diba sabi ko kanina na, if tayo yung buyer and then tayo yung mabayad ng shipment, yung shipment cost is part of the price of the inventory that we purchase. So instead of debiting freight in, para hindi na kayo mahirapan in solving net purchases, we simply debit merchandise inventory and we credit the cash instead of freight in. So there are also scenarios where we debit freight in. So, and then pag solve natin ng net purchases, we simply add it. Yun. So, yun lang. And then, sa freight cost, sa seller's book naman, if yung seller ang magbabayad, he will not recognize it as part of the inventory price. Kung hindi, it is an expense on his side. Debit freight out, credit cash, or debit delivery expense. Kasi yung freight out, it is part of our operating expense in which we deduct from our sales soon in our income statement. So sales returns and allowances, this is a sample problem. So this is the buyer's general journal and this is the seller's general journal. Purchase, yung buyer purchased 50 items on account for 200 pesos each. Terms, FOB destination, each item costs 80 and the transportation charges are 850 pesos. So when we say destination, the seller shoulders the cost, transportation cost. So on behalf sa buyer, ang record lang niya is debit merchandise inventory, credit accounts payable kasi may utang siya and then nag-increase yung inventory niya. But on the other hand, sa seller na part, since FOB destination yan, nag-sell siya, nag-debit siya ng accounts receivable, nag-credit siya ng sales, nag-update siya ng inventory para ma-update yung balance ng inventory niya because of sales, nag-credit siya ng inventory, nag-debit siya ng cost of goods sold. And now, since siya yung nagbayad, he will recognize an operating expense out of that transportation cost. We debit freight out and credit accounts payable. So, simple lang, di ba? So, ganyan yung itsura pag FOB destination. How about FOB shipping point? Pag FOB shipping point, meaning yung buyer yung magbabayad ng ating shipment, and then yung seller, wala siyang bayaran, just the buyer. So yung entry ng buyer is merchandise inventory and accounts payable 10,000 and freight in accounts payable 850. But recently I told you that freight in is part of the purchases or the price of the merchandise inventory kasi i-add natin yan sa ating purchases soon in our net purchase computation. So instead na dalawang entry, yung gawin mo, it's a compound entry is gawin mo na lang siyang one entry, it's a compound entry. So, yung merchandise inventory, pwede mo siyang i-debit na 10,850 and mag-credit ka ng accounts payable na 10,850. Whereas yung seller naman is yung entry lang niya is debit to recognize the sales and recognize the update of the inventory, which is a reduction of his inventory due to sales. So, hope everything is clear. We started with the purchases, the sales, and the returns and transportation costs. So, as an assessment or do-it-yourself activity, since I am just recording this discussion, just simply maybe screenshot the screen or pause the video recording and answer this assessment and do it yourself to practice your knowledge about the discussion for today. So on June 1, purchase merchandise and account. On June 2, this is a cash sale. On June 4, this is sales on account or credit sales. On June 7, this is a purchase return. And on June 10, this is a sales return. So just pause the video and answer the activity. And then here is our answers. So in June 1, purchase merchandise on account 80,000. We debit merchandise inventory 80,000 and credit accounts payable to recognize our liability, which is 80,000. Simple. So in June 2, cash sales for 180. The merchandise costs 90,000. We are the seller, so we debit cash. We credit sales 180,000. We update our inventory, debit cost of goods sold, and credit merchandise inventory. Next, sales on account 650,000. Merchandise costing 325. So Leticia, as the seller, will record debit a receivable 650 based on the selling price and a sale credit of 650,000, and he debits cost of goods sold at the cost of the inventory sold and credit merchandise inventory at the cost of the goods sold. Number 7, June 7 rather, return merchandise purchase in June 1 due to defects. So, si Leticia nag-purchase pero hindi niya nagustuhan yung outcome o na-deliver sa kanya na goods. So, nag-return siya ng purchases. Ginawa niya na entry is nag-debit siya ng accounts payable na 80,000 and nag-credit siya ng merchandise inventory. So, yun lang. Binalik niya lang yung accounts payable. Accounts payable and credit merchandise inventory. Okay. And then, June 10, receive return merchandise sold on account for 90,000 costing 45,000. So we debit sales returns and allowances, 90,000. We credit accounts receivable of 90,000. We update the merchandise inventory of 45,000 and cost of goods sold 45,000 at the cost of the goods being sold. So, parang may kulang, no? So, yung sa number 7, dapat nag-debit tayo ng purchase returns and, no, mali pala. So, that's right. Ni-reverse natin yung ating records, accounts payable, and we credit merchandise inventory to decrease our liability and decrease our inventory. So, that's right. So, that's the end of my discussion. I hope that you learned something from it about merchandising business transaction. So as a summary, when just always know on what side you are recording. Are you the seller or the buyer? And then everything will be easy for you to understand the transaction. So that would be all for my discussion. Thank you for listening and spending time to acquire this knowledge. And I sincerely thank and give my gratitude to our Lord, to our Dean of the College of Accounting Education, Lord Eddie Aguilar, for allowing me to share and this knowledge that He assigned to me, this task that He assigned to me. So thank you guys for listening. God bless and may you have a good day.